Eric Muadh, Muadh.com, with the US markets weekend market analysis for the weekend of May 16th, May 17th, 2015. By the way, before I forget, don't forget to check out my world market analysis for this weekend by going to YouTube and just searching for this. So this should be good for the weekend of May 16th and May 17th, 2015. So again, world market analysis on my YouTube channel, just search for that, and that should give you an idea of what world markets look like from a technical standpoint. We see here the close on Friday where markets were pretty much unchanged, but we see that the Dow and the S&P 500 for the week did end up closing at fresh all-time weekly closing highs. For the week, we see that the S&P 500 was up 0.31%. For the week, the Dow was up 0.45%. And for the week, the Nasdaq was up the most, up 0.89. So let's go to the charts. We begin by taking a look at the Nasdaq weekly. We can see here that on this 3-year weekly chart that the market, as far as the Nasdaq is concerned, has yet to break out. The level to watch right now is 5,092.09. If the market can climb above that, that's going to be a fresh weekly breakout. For now, we still have to wait and see if the market has enough strength to take out that recent weekly closing high. As far as the RSI is concerned on the weekly, we continue seeing this huge wedge developing, and as we've been noting, either we are going to break out by moving above the wedge for a strong move higher, or we are going to break down and have a strong push to the downside. So we are still in the construction of that wedge. It is hard to read into what the market is doing right now. Take a look at the daily. The one thing I do note here is we seem to have held nice support here around the 50-day moving average on the RSI on the daily. If you recall, we had come back to this support level when the market was trading lower, somewhere at these lows. The market did find support exactly on the line where it should find support, and since then the market has had a nice recovery of recent lows. In fact, if you take a look at the weekly chart for the Dow, you can see that the Dow is now above the previous weekly closing highs of 18,140, and this being now a fresh all-time weekly closing high for the Dow. And this is good from the bull standpoint, because this is what the market needed to trade above after many weeks of failure to hold above that level. We finally see that the market has gathered enough energy to move above that. Of course, if the market is to continue building on that, it needs to defend the previous weekly closing high of 18,140. So good close into the end of the week there, showing that the market could have an intention of trading higher. As far as the Dow is concerned on the weekly, we have this wedge developing, or at least now we can say that the market has moved above that wedge, and if that's the case, that might suggest that this market is due for a good run higher. And so really, if you're looking for a reason to be bearish, then if the market moves back below 18,140, that might be your cue that the market is actually failing to hold breakout levels. So that would be the level to watch. Anything pushing the market back below the previous weekly closing high would be a red flag that the market could be actually looking to go lower. But as long as the market is holding above 18,140, the Dow is showing that the market could have more upside. Take a look at the Dow daily, and we can see that we did come close to the previous daily all-time daily closing high of 18,288.63. We closed just below that. Now this is the level that bulls would like the market to clear, and anything above that is bullish. Otherwise, if we can't move above this recent all-time daily closing high, then the market could stall. We can also see that on the RSI, if you draw a line connecting the highs, really we are not out of this declining resistance line. So I would say that from a daily standpoint, this is a problem here. If this continues showing resistance, one would expect the market to pull back. Otherwise, if you're bullish, you want the market to trade decisively above this resistance line. So it needs to be trading above that. If it can build on that, that's good. Otherwise, this could also easily turn into resistance based on this very simple line connecting recent RSI highs. Now, if we take a look at the Dow hourly, and this is very simple to see, based on the RSI, connecting RSI highs going back to November on the hourly, and here I'm using RSI period of 26. You'll notice that now we are back to where we've been suspecting all week that the market could stall, which is right there. So as long as that's the area where the market has settled at the end of the week, depending on what happens in the new week, obviously bulls want to see the market take out that resistance line there. The bulls want the market to trade above that line. Otherwise, based on where we closed on Friday, it looks to me like this could also be a reason for bears to believe that the market could stall, because here, if that resistance is confirmed, that would indicate that prices are due to come down, at least short term, as far as the Dow hourly is concerned. Now let's take a look at the Dow Transports weekly. It's just one simple observation. We did trade below 8649.32, which is 2015 weekly closing lows, but we did not close below that threshold. So this line again held, and we did close at 8680, so which is showing that the market did defend and did not break below 2014 weekly closing lows. We also see that the very reliable line that we've been following for support still continues to offer the market, as far as the transports are concerned, a chance to bounce. And for those of you who are new to this, it's because this was the breakout level beginning of 2013 here. That breakout and the RSI began this nice price move, and over a period of about 2 years, the Dow Transport had a nice run. Now the line extension of that breakout level is where we've been finding support since, let's call it mid 2013. Support on the line there, nice entries into the Dow Transports after a pullback. Support here for nice lows. We came close to that support on the line there, which were nice lows here. We had uniform activity below the line back above it for those lows, and recently we've been bumping here and holding. So we see that as of the close of this past week, the market is still showing that this could still continue to offer the market much needed support, suggesting that this level here could also be a level upon which the market starts building and moving higher. In fact, if we take a look at the Dow Transports daily, we can see that we still managed to close above this area of support. Now this band of support has been holding the market together since this breakout. This has been becoming, or at least the market has been coming back to test this level on numerous occasions since late 2014, and every time the market seems to be finding buyers. So we continue to hold that level. This can also be seen by the daily RSI, which, as you can see here, was showing improving technicals as the market was making this lows attempt here. So improving technicals. Also it found support on the line where it's been bouncing here, and so those two lines did offer enough support, and we can see that as of Thursday the market found support there and had a nice showing on Friday. So the dailies are showing that the Dow Transports did look like they are due for a bounce. Take a look at the Dow Transports hourly, and now you can see clearly the line I was talking about is this level here, which has been tested many times on the hourly. As you can see, since this lows here, market comes here, pegs that low, and seems to bounce. So we see the same thing happening in the current market over the last 2 days. We came here on the hourly, and finally we found support there. Since then the market has been moving higher. We can also see that the RSI did show hourly support by this simple straight line connecting recent lows here, here, and at the lows of the week there. So that hourly showing support also on this line where this market has been bouncing. Those two levels is where the market had closed at the lows of the week, and now we see that the hourly is showing that it is due for recovery. Now, of course, if the market was to trade and break that line, so if it was to trade and break that support level, a break of that level would suggest that finally we're in a new phase and that the market is poised to go lower. Otherwise, that is all a possibility. For now, the only thing we know is that this level has held, and if it has held, we have to assume that the thinking here is that the market wants to move higher. We take a look at the S&P 500 hourly, closing at a fresh all-time weekly closing high, and now above the previous weekly closing high, which was at 2117.69. So that's a fresh weekly breakout. Of course, if you're a bull, you'd like to see the market hold above that level, and if you're bearish, you'd like the market to crack back below 2117.69. So that's where the battlefield is. Above that previous weekly closing high, the market is bullish. If it trades back below that, then that's bearish. On the RSI, not too much of an improvement in terms of the wedge. We closed back at the top side of this wedge, and we are still within the wedge. So if we can finally, for example, break below that, then we might get a decisive move lower. A break of that wedge might start pushing the market lower, and we know that if we break out above the wedge, the market might be due for a nice push higher. So we are still within the wedge, and it is almost difficult to tell which way that weekly RSI wedge is pointing to. We take a look at the S&P 500 daily, and we see here fresh all-time daily closing high. In fact, 2 days back to back, trading above 2117.69. And so from a daily standpoint, this market broke out on Thursday and closed higher on Friday, albeit a little bit slightly higher, 0.08% higher, but that is a follow-through, which means that the market did add on to its previous gain. And more than whenever you see that type of action where a market breaks out and follows through, it tends to indicate good momentum for down the road. Now, the only problem with the market is if we take a look at the RSI, we can see that it has come back to this top side on the daily. If this is confirmed as resistance here on the daily RSI, then one can logically expect this market to pull back. Otherwise, those who are bullish would like the market to finally gather enough momentum and break out above this RSI resistance line. So above that, markets are bullish. Otherwise, if they can't move above that line and they show resistance, so it would look something like, show this, resistance would be something like hitting that line and starting to point down. That would be indication that the breakout is going to fail. But simplest way to look at this is, as long as the market is holding above the previous daily closing high of 2117.69, as long as the market is above that level, one can assume that the bulls are still in control. Take a look at the S&P 500 hourly, and just like the Dow, we can see that we are still contending with RSI resistance connecting the tops like that, and we did end the week there exactly on the line. So that could easily become resistance if the market cannot trade above that line. And you can see this is where, if you take all these most recent highs, for example, the high there connects with this high and a pullback, that also connects with that high and a pullback, and the actual intraday high connects with this high here. So this line has been very instrumental in stalling most of the market's efforts to record higher prices. So if it becomes resistance again, one can expect there to be a pullback in the market, albeit short term, maybe even the beginning of something serious to the downside. Let's take a look at one 30-minute chart, and it is S&P 500 30-minute chart, and just drawing a simple line where it's been stalling like that. You can see that we are back to where the market could show resistance. Now, of course, if the market can clear this resistance, then that is going to be good. So if the market can stay above that line, that's very bullish. Otherwise, you can see that this is where recent stall points in the market short term have been taking place on this blue line. Every time the market has been coming here, even this break off the highs was during this price movement. So the market needs to be above that line if it's going to do well. Otherwise, this again could offer resistance, suggesting lower prices short term. Let's take a look at Apple, and we begin by taking a look at the monthly, and we can see that the monthly is now showing a breakout above the previous monthly closing high, and the breakout level as far as Apple is concerned on the monthly is that it needs to hold above 127.63. So if it can stay above that price, which is what it's doing right now, this is good indication of intention to move higher. We see that we are trading still with the RSI above 69.1 on the monthly. As long as that's the case, that's a good market. So if Apple can stay above 127.63, it is definitely breaking out. Quick look at the weekly shows that just like the Nasdaq itself, we have yet to break out above recent all-time weekly closing highs. And the level to watch there for a weekly breakout, jumping above that price of 129.74 would indicate that the bulls are ready to push the market to record highs as far as Apple is concerned. So that's the level to watch if you miss the monthly breakout. But even the monthly breakout is not too extended, so I would still use the monthly breakout here at 127.93 for a reason why one can hold this stock. Obviously, if that breakout is failing and the stock moves back below that threshold, anything moving the stock back below 127.63 would indicate that the stock is stalling. Right now it's above that. One has to assume that the market wants to push Apple higher. As far as the monthlies are concerned, we need to keep watching, because right now we are looking at markets that are showing monthly breakouts very quietly, but it's taking place. You can see here that the S&P 500 is finally jumping above the previous monthly closing high, and the level to watch for the SPX is 2104.50. So as long as the market is trading above this number, that suggests that it continues to trade well. Again, another weekend where we are talking about the monthly RSI trading above 69.1, which is good. We take a look at the Dow, which is now showing a fresh monthly breakout, and the level to watch, as long as this is what is going on the monthly, this is a good breakout, indicating that we could easily see another push to record highs. And we can see here that the Dow needs to stay above 18,132.70, which would indicate that this breakout continues to look good. Also, the Dow needs to move back above 69.1 if it's truly to get into a good momentum groove. Right now trading at 69.994. We need this market to be above 69.10 if you're a bull. Otherwise, those who are bearish would like the market to struggle to hold above that threshold of 69.1. Take a look here at the Nasdaq, and we can see that the Nasdaq again breaking out above the recent monthly closing high, and as long as it is breaking out on the monthly and holding above 49.63, 63.53, as long as it's holding above the previous recent monthly closing high, this market looks strong. Keep in mind that we've been trading above 69.10 going back to the middle of 2013. So the Nasdaq continues being strong. By the way, before I forget, don't forget to check out my world market analysis for this weekend by going to YouTube and just searching for this. So this should be good for the weekend of May 16th and May 17th, 2015. So again, world market analysis on my YouTube channel, just search for that, and that should give you an idea of what world markets look like from a technical standpoint. This is Eric Moore with Moore.com. As always, good luck, peace, and blessings. Woo!